Hi everyone, my name is Piterpakulski. Today we will continue building financial model of vending machines, and today we will start building cash flow statement. So this is one of the most important statements in your financial model. Here you will be able to see how much financing you need, when you need it, what type of financing you will need. Later you will be able to create simple discounted payback period diagrams from the cash flow statement. So cash flow statement, that's why is very important part of your financial model that will give you the clear picture of your business, the structure of revenues, expenses, the cash balance at the end of this or that month. So you will be able to see what cash will be generated by this or that moment in the future of your projections. So let's start. If you find this video valuable, you may give us a like, subscribe, share this video with your friends. So you also can order financial models from scratch for your unique business ideas. We can help you with that. So let's start modeling. I will leave here some place for taxes. Cash flow statement. Cash flow statement. So we're starting from revenues. So revenues we're taking from here. Then we are moving to direct expenses. Direct expenses. So we are taking direct expenses from here. Then we have fixed service expenses. They are also direct expenses. Periodic expenses, depending on the amount of vending machines, are also direct expenses. Periodic asset, direct payroll will go to payroll. Direct expenses by vending machines, we are taking it. Investment plan, fixed expenses. Okay, so this block will be for direct expenses. Then we move to fixed expenses. Fixed expense. So here will be fixed expenses. Then we are moving to payroll. Payroll we are taking from here, fixed service, investment, periodic, direct payroll, and we have payroll for management company. So here we have revenues minus direct expenses minus fixed minus payroll. Then what else? Then we are moving to taxes. We will create the block for taxes here. Taxes, then tax name, then rate, so for example we have revenue tax, then profit tax, payroll tax, asset tax we already calculated. So revenue tax, here will be the rates, they are input, so we mark them with blue color. So revenue tax will be, for example, 3%, profit tax will be 5%, payroll will be 7%, for example. So taxes we put here. Here I will put asset tax. So revenue tax we are calculating by multiplying the revenue on revenue tax rate. Then profit tax, then we calculate the payroll tax, multiplying the tax rate. By the way, totals are right.
Then we are calculating the result from operating activity.
So this is the end of the first block. So we are taking revenues minus direct expenses minus fixed minus payroll minus taxes. Then we are moving to investment activity. For investments we have investment plan for vending machines, 200 vending machines that are inside our operating activity, and we have investment plan for management company. So we have two investment plans. Here is the result from investment activity. Then we are moving to financing activity. This is equity, or our money from our own pocket. Then we have the inflow of loan. Then we have payments for principal, and we have interest payments. This will be the input. Here we will have the result from financing activity. This plus this minus this minus this Now we calculate the cash balance at the beginning of the period. By the way, profit tax. If the revenue minus this minus payroll minus revenue minus this minus this minus this minus this minus this and minus this is less than 0, then we put 0, otherwise we will take this base, and multiply it on the tax rate, profit tax, and we are freezing profit tax. So we are closing brackets. Here is the profit tax. Now we are calculating cash balance at the beginning of period, and finally we have cash balance at the end of period, and this will be the final line of the cash flow statement. I will take the result from operating activity plus the result from investment activity plus the result from financing activity plus cash balance at the beginning of the period. Then I will put this value here, then I will extrapolate this formula to the right, and then I will extrapolate both these cells to the right. So now we are done with the cash flow statement. Next video will be devoted to calculating the amount of financing that we need to start our project. So if you find this video valuable, you may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. So see you guys in next videos. Thank you and bye.